Hi everyone and welcome to Inderes TV. Today we're going to talk about SciBase, who released their Q1 report in the end of May last week. And with me today I have our analyst who is covering SciBase, Antti. Welcome, Antti.
Thanks, Jesper.
So in the Q1 report we could see that SciBase quite slowly are growing and with controlled cash burn, but visibility for future growth are low.
Exactly, indeed. So we were expecting SciBase to grow around 31%, and what they achieved was 18%. At the same time, the cash burn, or if we just look at the EBIT, that was roughly 14 million SEK negative. Of course, you shouldn't look at these numbers too strictly in cases like this. It's always about where do the deals go, when do you get the orders. There's always something slipping from end of the quarter, so that doesn't matter as much. But as you mentioned, it's about the visibility, and also in this case, we're looking at the company on a multi-year horizon, and it's a 10-year case for the company to build into the position we think it can achieve. But on the visibility, the report didn't offer much on that, so we still know that SciBase is making progress. They're getting more reimbursement in the US, or at least are working towards getting that, which could then help them sell to the clinics in the US when the patients are getting the treatments or the diagnostics better covered by the insurance companies. But not a lot was received on that in the report. So net, the uncertainty still related to the timing of growth, which we think has a good foundation, still remains uncertain. And with the small kind of miss on the revenue side, it turned a little bit to the negative side. But it's a long-term case, and it's not about one quarter, so I still have to note that.
So the investment case rests on an attractive foundation, as you mentioned, hoping on Nevisense, the lead product.
Yeah, exactly. So the foundation is good, and like I mentioned in previous videos, there's a clear need for this product. There's a clear need for better skin cancer diagnostics, avoiding the missed melanomas, which would be really valuable to catch early on. And Nevisense has shown to be a very good device for this use case, and no serious competition in our view for that. So that's super good. And then the way their business works, it's a recurring model, so you have the usage of the electrodes that are part of the device, and that is a repeating income for SciBase when they sell those pieces. And this is a very high margin business as well. So the foundation is very attractive, and it's a lot about the timing and how fast do things progress. You have the foundation that this should be a device that is needed. They are making commercial progress, but then how long does it take to get to a level where they're cash flow neutral and start bringing money back to the shareholders? And that is really the question here. And when you start getting more visibility to that, that's really when the risks start falling down. Because right now they're still in the cash burning phase.
So the conditions are getting better for faster growth in the future, but you mentioned everything is not in the company's hand here. Could you elaborate what you mean with that?
Yeah, indeed. So progress is being made, at least based on what the company is announcing. They're also doing other market openings a bit opportunistically, like in Dubai and Austria. They're starting selling there. But indeed, it's even though you have the good foundation, and if the company is executing everything perfectly, it still takes the customers the courage and willingness to take a new device into use, and for the customers to be ready to take the device to new clinics, to many practitioners, and then start using that on a frequent basis in their operations. So that's the customer side, and SciBase, of course, can't fully control how that happens. And then there's the reimbursement side, which is about the insurance companies. So what SciBase needs to do is that they need to generate claims for these insurance companies, and then through a process get these insurance companies to approve a certain level of insurance coverage for diagnosis made with Nevisense device. And this is also a question mark, that how long does it take to get a certain level of coverage? So let's say in a particular state in the US, how long does it take for SciBase to have 50% of the patients under some insurance company's coverage, which then helps them sell a bit more. And again, they can do their part in this process, help their customers generate those claims, put some pressure on the insurance companies, but then in the end, it's about the insurance companies' processes, how fast do things progress. So it's a mix of trying to understand how well is the company doing their part, and then what's happening in the market, and what part is sort of something they just have to live with.
Yeah, I understand. Yeah. So looking ahead, we are more cautiously at the moment at SciBase. Why is that?
Yeah. So our view on the valuation is, or where we can justify the valuation right now, is around 31 öre to 61 öre. I think those were the exact numbers. You can check the decimals on the on the report. But it's a lot about what are the drivers for the risk level to come down. So this case is a lot about balancing between the potential, which is very clear. Like I mentioned before, the foundation for this investment case is pretty clear. You have a good product, it's a good business model. Long term, this should be an attractive business to own. But then on the short term, we have the uncertainties regarding the pace of progress. How much fast will the company move? And as they are still in the cash burning phase, what they're able to show in this 12 months and 24 months horizon will have an influence on the terms that they get for their funding. And the way we look at them is that when they start showing clear signs of growth in the US market, which is obviously a very big market, and in our view, the market that is going to bring SciBase to cash flow neutrality and stop the cash burn and stop the need for doing more equity raises. When that visibility builds up and you can say, hey, so now I know it's most likely going to be this many raises, and then we're cash flow neutral, and then we're at the good place where the business is giving money back. So when you start building visibility towards that, then the risk level starts to fall. And the way we look at it is that 25 and 26 years, so 1 to 2 years from now, we start getting more signs of sales scaling up in the US, mainly driven by the insurance coverage increasing, and then SciBase being able to sell more in those states and increase the usage of Nevisense in those states. And now we're leaning more towards the lower end of our valuation range because of these drivers. Because still in the next 12 months, SciBase will for sure be making progress. I have no doubt about that.
No.
But then will we have a clear visibility on how fast the growth in US will pick up once the insurance coverage is there? I don't think we will have clear view on that yet on 12-month horizon. So if we look at 1 year out, the risk reward doesn't look attractive enough. And of course, the share is priced at the lower end of our valuation range. And you can always look at the case and say, well, I'm looking at it the long term. I think this case is going to be very attractive in the long run. And I think there is that case. You can say that the potential is not being priced in. But you also need to remember that how the funding comes in will have a big impact on what the returns will be for the investors. So it's a bit of a balance. And right now, we think the valuation looks about right, based on the drivers and the signals that will reduce the risk level in the 12 months. But at the same time, I think there's enough drivers for the current valuation to be sort of founded. And it's good to also remember, I know this is becoming a long, long answer, but the company has a significant amount of warrants above 42 öre, which will also influence the returns for the owners of SciBase share. Because then when the equity value of the company grows beyond 42 öre per share, then the company's value needs to grow quite a bit more than what the share price will actually increase, because the warrants will get some of that value. So in a sense, the investment case is also more attractive under 42 öre for the shareholders, because until then it's just a share that will be taking the value. But that's the case in short. So still cautious on the short term, but of course we're continuously following what kind of signals are coming from the company. And you never know if there's a bigger leap at some point happening that we have not yet sort of modeled in. And that can always happen. But my best view right now is that 25 and 26 are the years when we start getting those signals and start building the visibility towards cash flow neutrality. And until then, the pricing, I believe, has less drivers to go towards the full potential of what the company should be valued if they get to the place where they want to go in a 10-year horizon.
I understand. Go check out the report on Inderes.se or find it in the description of this interview, but also find the thread on our forum where you are always available for questions, right?
Yeah, absolutely. Jag kan också svara frågor på svenska.
Perfect. Thank you very much for joining me today.